Hello and happy Money Monday. Talk today about business bank accounts. So there's a best practice that I just want to share with you. If you are in business, you need to have separate finances, right? So you need a business bank account and or business credit card as well to be able to run all of your finances through so you can keep them separate. But that's not what I'm here to share with you today. What I'm here to share with you is oftentimes businesses that have a lot of transactions coming in and out, or big expenses, maybe like a product-based business where you have to buy a bunch of inventory or materials or something where you've got money going out the door, and then you've got, checks maybe where your checking account number is listed, or any kind of exposure to people getting your account information where you just got a lot going on in your business. First of all, congrats about that. But you might want to incorporate this best practice because we have it implemented for some of our clients to make sure that they can reduce the exposure and the risk of their cash, right? And so what I mean by that is, ta-da, you would set up 2 bank accounts. Number 1 would be a receiving account. So if you have an online platform where people are purchasing products, say like a Shopify or something like that, you have one receiving account where all those deposits go in. So this is where all the money inflow comes in. Your second account would be a disbursement or an operating account. This is where you would pay out of. So you would pay from this account. Now, why would we do that? Why would we have you set up 2 accounts? Well, it's really about exposure and risk. So for example, if you have $100,000 in your receiving account and you know that it costs you $15,000 a month to run your business, your burn rate, you've heard me talk about that before, you wouldn't want to keep all of that $100,000 in your operating or your disbursement account, because if somebody got a hold of that account number, and there's fraud that still happens, right? If someone got a hold of it, they could take all of the $100,000 out if you had it sitting in that account. So in order to mitigate the risk, we basically say 1 receiving account, 1 operating or disbursement account, and then you transfer over as you need it. So on big outflows, like if an inventory purchase, a payroll, estimated taxes, those kinds of things. And you then get to control it. Because if anybody's going to have access to account numbers through payments and different things that could potentially have fraud, it's going to be from the disbursement account. This receiving account is all where the money comes in, and you then get to control it. You also have eyes on what you're spending, what your burn rate is, and how to really manage that cash flow to be of your benefit. So you can use your bank accounts as a system to be able to do that. So if that's you, I would consider setting up that practice. If you have any questions, by all means, reach out. We're always here to help advise you based on our experience as the CFO team. So with that, happy Money Monday. Till next time.